Hi, welcome to our market update for February of 2021 for the Phoenix real estate market. I'm Steve Trang with Stunning Homes Realty. So, a couple of interesting things to note. Crawford Market Index is highest it's ever been. We're up to 491. Last year, we peaked out at 400, which was already a record that we've ever had, higher than we ever had in 2005. So, the Crawford Market Index shows no signs of slowing down. We were celebrating a little bit in Q4 of last year, saying, well, finally, at least the demand or the ratio between demand and supply is finally coming to a reasonable halt, or at least slowing down. And that has not been the trend. That has actually gotten worse. So, despite a very tight supply, July 2021 managed to break the all time record for closed listings in our MLS for the month of January. The total across all types and areas was 7,330. The best January we ever prior to this was back in 2005 with 6,586. And the previous record for sales volume was set last year, but with all the appreciation we've had year over year, 2021, we're at 3.1 billion. So our market sales volume went up 35% year over year. Kind of a crazy mark. January is usually a very good month for new listings, and overall supply tends to be stronger at the beginning of February than it was at the turn of the year. However, 2021 has been completely different. New listings arrived at a much lower pace than we expected, but it was still strong enough to soak up everything that sellers could ask for. So instead of rising, supply actually collapsed another 14.5% during January. This does not show up when we look at active listings, including UCB and CCBS, because so many agents, instead of putting it pending, they put it as active, subject to backup offers. So a couple of numbers we want to look at here. Active listings, we're at 5,180, which is crazy because that's down 57% year over year from 11,974. So more than half it's dropped and is down 15% again from the previous month. Under contract and pending, we're at 11,600 versus 10,000 this time last year. So we're up 16% year over year and up 18% from 9,800 the month before. Monthly total sales, 7,330. That's up 13% year over year, but down 27% from 10,000 last month. But just to clarify, December was the best month we ever had. Monthly average sales price per square foot, $218 per square foot, which is up an incredible 19.4% from $182 per foot last year, and up 3% from $212 last month. So just to think, sales price has gone up 3% in month over month. Historically, appreciation is about 2 or 3% per year. We went up 3% in 1 month. And average median sales price is up to $339,000. Last month, $332,000 was a new record ever, and we're up to $339,000. So it's up 2% and up 17% from $289,900 the previous year. So a couple things to look at. Supply situation is the worst we've ever recorded, lower than the first quarter of 2005. So it's never been this low. This is a new record. And the thing that's interesting is when supply is this low, it actually starts to drag demand down with it because people are kind of giving up. Kind of similar to what you see with the unemployment market. Once unemployment is so high, people just stop looking for jobs. Buyers are no longer looking for houses, or fewer buyers are looking for houses. And this is probably due to a combination of factors: higher interest rates, lack of supply, and affordability concerns. People keep thinking, how much higher can the prices go? But there's still a ton of demand, so the prices can continue to grow. We'll see how this trending continues, but the predicted annual appreciation rate, we were anticipating probably this year 19% year over year at some point. Well, we already reached 30% year over year, so it's kind of crazy to look at. So what are the hope for some of the buyers that are looking for homes? Well, new home builders. But new home builders actually cannot create any more supply than they've already created. There are physical, financial, and interestingly, legal limits to how quickly they can do this. So there's just not a lot of reprieve right now for buyers, unfortunately. And then we like to keep the track of, the stats in the MLS. But one thing the MLS doesn't actually track is private homes sold and new home builds. So Crawford, they're actively tracking what's going on with the new home build communities. But since they're all pulling from tax records, there's a limitation how quickly they can pull that data, since it's not as fast as our current MLS. But all in all, there's no current indication that supply is going to continue, or no indication that supply trends will improve, and it will probably get worse over the next couple of months. We would not be surprised to see trend demand to continue to go lower just because the people are giving up. But that's not going to affect pricing. Pricing is going to continue to go up, which was what we predicted all throughout last year. So our best guess is that the average price per square foot will continue to appreciate 2 to 3% each and every month for the next several months. It's really difficult to fathom, but that's what we're anticipating from this. So all in all, there were 111,000 new listings added to MLS in all of 2020 last year. And that was more than 2019. So it seems weird that our supply keeps going down and down and down. But we actually added more new listings last year than the year before. Some other interesting facts: luxury is crazy. Even homes over $1 million are flying off the shelves. Outside of demand, outside of new MLS, new homes are trying to build as much as they can, but they're also limited between the pandemic and forest fires. So it's caused a lot of supply line disruptions as well as supply just overall disruption. And so as supply began to drop last month, December saw 33% of closed sales go over asking price, right? So in all of December, 33% of all sales went over their asking price, and only 10% of the homes actually had the seller paying closing costs. So historically, we see 1 in 4, 1 in 5, the seller will pay the buyer's closing costs, only 10% in December. So that's a kind of a crazy trend, something to keep an eye on. So at the end of the day, if you're a buyer starting your search, you got to be on top of your loan situation. You got to get pre-qualified beforehand, because the moment the property hits the market, you need to be ready. And if you're trying to get qualified at that point, you're already too far behind. And of course, what I'd be remiss to say, don't forget to talk to an agent at Stunning Homes Realty, because we're on top of all of this. And then for sellers, the state of Arizona ranked 3rd in the nation for population growth, according to the United States Census Bureau, only behind Texas and Florida. And so moving companies such as Atlas, United Van Lines, and North American have released their annual migration reports, and Arizona was 2 out of the 3 on their top 5 states for inbound movers. And then interestingly enough, 37% of the people that moved here were moving here for retirement. We know that this is a retirement state, but I was surprised that given the massive increase in migration, that still 37% of inbound moves were for retirement. 70% of the people that moved here were older than 55. And lastly, the most interesting statistic is that 63% of people that moved here made over $100,000 last year. So that's the market update. Like I said, if you're looking to buy, you're looking to sell, talk to a Stunning Homes Realty agent. We're here to help you guys and to help you prepare to deal with this crazy market.